Welcome to the Real Estate Wisdom Podcast with Vish. Today we are diving into the latest developments shaking up the Canadian housing market, which starts with rate cuts and latest announcement. So let's break it down. So you heard the news. The Bank of Canada just slashed its lending rate by 50 basis points as anticipated, bringing it down to a 3.25%. And this is their second oversized cut in a row following October's reduction. Why the aggressive move? I will say, even the economy showing on the numbers slowing down. But inflation has finally hit the 2% target, and our economy is showing signs of cooling off. That's according to the data. I'm not sure much about that in general because prices are still high on a lot of things. But let's see how it will rule out. But the big game changer is starting December 15th, which was yesterday, we got some exciting changes coming to the mortgage landscape. 30-year amortizations will be available to all first-time home buyers and for new builds, which is interesting, right? The insured mortgage limit is jumping to 1.5 million. I did in my previous podcast as well. That shows the sign affordability is not going to go down as soon as we want, right? And these changes aim to make home ownership more accessible, especially in the pricey markets like Toronto and Vancouver. Well, let's see how this rolls out. Our government is trying everything to do. How is going to impact the housing market? Now you might be wondering, Vish, what does all this mean for the housing market? Well, it's a mixed bag, and to be honest. People still have fear and how the economy is going to roll out, and the rate could, ramp up December activity, particularly in Ontario and BC, but we haven't seen that yet. These changes combined with lower rates might drive up buyer demand and potentially push real estate prices higher. They all hoping for that. That was the BOC and government's plan, I guess. But here's the kicker. While we might see a short-term boost, the impact may be limited in the long run. So as I mentioned before, it's going to be slow. We're not going to see any dramatic change. I think by reading the market and talking to people, the CMHC, the Canada Mortgage and Housing Corporation, isn't sitting idle. And they announced enhancements to the Affordable Housing Fund and Apartment Construction Loan Program, which definitely takes time, right? A commitment of $20.65 billion in loans to support the creation of over 53,000 purpose-built rental homes. Well, it's a great move, but I think it's not enough. It's not going to be enough. They're also introducing a frequent builder framework to expedite applications for housing projects. So it's clear they are pulling out all the stops to address our housing supply issues. Well, I'm not sure. But let's see the bigger picture. Now, let's zoom out and look at some other factors at play. And the reason my saying for this one over here, researching and talking to people on the ground, what's happening? Employment. Our job market is softening. With unemployment hitting a 3-year high, this could impact housing demand. Of course, you don't have a job. How are you going to afford the house or think about buying a house, right? Other important factor is immigration. There are imports of immigrants leaving Canada due to high living cost. And the government is reducing immigration targets as well. This shift could affect housing demand and supply dynamics. So things are a little bit uncertain about that. We'll see how that goes. Global economy also making impact. We're facing potential trade war risk with the U.S., which the Bank of Canada is keeping a close eye on. Yeah, a lot is happening. We are not sitting idle, right? Now, the real estate conundrum, here's where things get interesting. Canada's economy is becoming increasingly reliant on real estate. In fact, residential investment rose to 7.8% of GDP in Q3 2023. I'm talking about like last year. I don't have the data for this year yet. And that's higher than the US during its 2006 housing bubble. So here's the million-dollar question. Is this sustainable? With housing affordability at record lows and many condos rentals in Toronto reportedly losing money each month, we might be walking a tight rope. I know major reforms need to happen. A lot of new things need to be happen. But again, what decision they have made, it's impacting us right now. Whatever decision going to make right now is going to take longer to recover that. So here's the advice for buyers. Timing is the key. If you are considering, I will say like for sellers, you might consider, listing is as soon as possible, or depending upon your situation, because buyer activity might increase. So there's some opportunity. It's not all gloomy out there. Price realistically, because avoid overpricing. A lot of time when people say property is not selling because price is not right. So work with their local real estate agent to set a competitive price based on current market conditions. It's not like what seller want to sell, what buyers want to buy. It's what's market telling, right? With rising living cost, buyers are increasingly interested in energy efficient homes. So showcase any green features your property may have. Do the upgrades, and make sure it's energy efficient. Consider your next move. In a market with limited inventory, have a plan for your next home before listing your current one. But I sometimes, this is the research when I did, but I will say sell first, then buy. Be prepared to regional differences. If you are in a hot market like the prairies, you might have more leverage. In cooling markets like parts of Ontario or BC, be prepared for a longer selling time. Yes, that's going to be continue. Depend upon, in your neighborhood, where you are and how you're pricing it and how you're marketing it. Now, advice for buyers. Watch for rate cuts. We already seen the rate cuts, but I know that you have a fear what's going to happen. Definitely look into keep an eye on the Bank of Canada's announcement, like a future announcement. But timing, sometimes it's hard to time it. So consider emerging markets with affordability challenges in major cities. Look at markets in the prairies or Atlantic Canada that are showing strong growth potential. So if you're thinking of investing or buying it somewhere where it's sustainable for you. But first of all, before you do that, get pre-approved. Even in a buyer's market, having a mortgage pre-approval strengthens your position and help you understand your budget. So you can negotiate better, believe me or not, once you're pre-approved. And one advice, don't rush, but be ready. While the market might ease in the later, it's already ease in 2024. I can't believe it's getting over. There's significant pent-up demand. Be prepared to act decisively when you find the right property. So preparation is the key. Depending upon you buying today, tomorrow, after a month, 6 months, whatever, right? Be prepared. And look at long-term value. Consider factors like upcoming infrastructure projects, zoning changes like those announced in BC and Toronto, GTA, and neighborhood development plans. Like Oakville have announced that as well, like some debate going on what to do or not. So what's the takeaway? The Canadian housing market is at a crossroads. While recent changes might provide a short-term boost, we are facing some significant long-term challenges. The challenge is not going away. As always in real estate, it's all about location, timing, and keeping a close eye on these evolving trends. Remember, real estate is typically a long-term investment. Despite short-term fluctuations, 73% of Canadians still believe that home ownership is the best long-term investment. However, it's crucial to consider your personal financial situation and long-term goals when making real estate decisions. I know I can go on and give you advice, and probably you have seen some things I'm repeating in my podcast from over a year. But as we wrap up this extended edition of the Real Estate Wisdom Podcast, remember that whether you're buying or selling, knowledge is your greatest asset in navigating the complex Canadian housing market. So stay informed, stay patient, and as always, happy house hunting. And if you need any advice, you can always reach out to me. Love to get your comments, your like, your share, because without your support, we were not able to do like 66 podcasts so far. So I'm really proud of you, proud of myself being consistent. I know sometime it happens, things happen. I got so busy and I don't have a time to record the podcast, but I made it a priority. I'm making sure that it should go on Monday. It's available for you to listen, and I like to share what's going on the market, keeping the eye on not only what's the announcements are happening, what's news are telling, but also more importantly, what's happening on the ground level, right? How people are feeling. And people's feeling right now is uncertainty. And that's why even these major rate cuts happen, we are not seeing, people jumping. We might see the other factor is also seasonal as well. It's holiday time, people want to enjoy, but also they're taking time to consider what's going to happen next. If you're planning for next year, I know you might be doing holidays, enjoying it. I'll be enjoying as well, but I will be available for you if you want any discussions to happen, and there's no obligation for that, right? And we can have a discussion and talk about what your situation is, what's your plan, not just for the coming year, but for next 2, 3, 4, 5, 10 years. If you look into that way, it might be much easier for you to make a decision for purchasing or making a biggest decision of your life, financial decision of your life. So enjoy your holidays, and wishing you Merry Christmas. But don't forget, we have next week the Christmas special coming in as well with the episode. So happy house hunting. Be happy. Bye for now. Disclaimer. The information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.